Good morning and welcome to Charting the Markets on Monday, the 21st of August 2023. Now, with today's economic calendar being empty, what we can look towards is that earlier this morning, the People's Bank of China eased its monetary policy on its 1-year loan prime rate to a record low of 3.45%, but that was actually less of a cut than was expected. Markets participants had hoped for a 15 basis point cut, and yet it was just a 10 basis point cut. And also the 5-year rate remained unchanged at 4.2%. And this led to Asian markets having really a mixed session. And when we look at European markets, though, this morning, they are bouncing back from last week's very heavy losses, which were in a lot of markets the heaviest losses we've seen since March of this year. So let's begin by having a look at the FTSE 100. And as we can see here on the daily financial bet, we've actually fallen to levels last seen between basically March and July. As you can see here, we've had a really good support area between 7,228 and 04, hold the index here, which dipped down to 7,216 on the daily financial bet. So from a technical perspective, what is interesting is that we are seeing these support areas all across the markets globally. So we see them in the US, we see them in Europe, we see them in some Asian markets. And therefore, it is quite likely that the support that we have tested last week is probably going to hold. And over the next few days, we could see quite significant recovery rallies in probably low volume because a lot of people are still on holiday in the Western Hemisphere. So what can we say about the FTSE 100? Basically, as long as we stay above 7,204, that is to say the March low on a daily chart closing basis, we should see a bounce back, take us not just back towards the early August lows at 7,438, but also possibly towards the 200-day simple moving average at 7,642. So that is a distinct possibility if the support holds. Now, if we were to fall through that support, though, let me just zoom back out again, then the next downside target area would be the early October high. And that was made around 7,105. And also we have the early November low at 7,071. So that is possible support area for the FTSE 100, but only if we were to fall through 7,204. And if we look at European markets, I thought we should have a look at the French market here. As you can see, we had a very nice rally since the October lows from last year. But then basically since April of this year, we've been trading in a sideways trading range. And interestingly enough, we last week tested the support area going back to May of this year, and basically bounced off as well. And that also came in marginally below the red line here, the 200-day simple moving average at 7,150. So what we're seeing there on the CAC 40 is also a bounce back at the moment. And this could just be an Elliott wave ABC correction, in which case we should be heading not only just back up again towards the July highs at 7,526, but also probably reach the highs seen back in April of this year. So we seem to be holding at the support area marginally above the psychological 7,000 mark on the CAC 40. And it looks as if the corrective move we've seen over the last few weeks has now ended, with further upside likely to be seen. Now, if we were to be proven wrong by the financial markets, and if we were to see a daily chart close below the 7,053 low seen back in July occur, then we would have possible downside targets at the late March lows at 6,952, and perhaps even lower levels taking us back towards the March lows of this year. But at the moment, as I've been saying, we are seeing the same as on the FTSE 100 and a lot of other indices, in that we are bouncing off support, and it looks as if this support is likely to hold. And if we move on to US markets, we can see here, for example, the NASDAQ 100, which has been the great outperformer this year. It basically briefly dipped to a 2-month low on Friday on higher bond yields and on worries that the Fed may have to keep its rates higher for longer, and that dampening the US economy. and basically we hit on this daily financial bed 14,554. That was marginally above the late May high at 14,530. So to these two levels basically offer pretty good support, and as long as that holds, we could see a resumption of the longer-term uptrend occur over the coming weeks and months. Now, obviously, all eyes are on the Jackson Hole Symposium, which starts on Thursday and ends on Saturday, and we'll see whether we get further guidance there with regards to US monetary policy. The US dollar has been appreciating over the last few weeks as flight to safety flows have led to a great appreciation of the US currency. And if you look at the European currency pairs, for example, the euro has also slid over the last few weeks. And you can see that against the British pound here, where we see euro sterling coming off. But again, what is interesting, euro sterling last week found a low at 85.24, which was marginally above this June to July major support area between 85.22 and 0.4. So it looks as if we're bouncing off the lower end of this sideways trading range we've been in now basically since the beginning of June, and could be heading back up again towards the upper end of that sideways trading range between, let's say, 86.50 and 87. So at the moment, it looks as if we're finding support and are trying to head back up again towards the orange line here, the 55-day, simple moving average at 85.85, and above there, we would then be heading back up again towards the June high at 86.58. So further sideways trading likely in store for euro sterling. But if we were to be incorrect with regards to this chart, as you can see here, if I zoom out quite a lot, and if we were to fall through the 85 mark, then there is not real support to speak of until we get down towards the late August lows around 84.08. So that would be a possible downside target if we were to fall through 85.04. But as I say, it looks as if we're bouncing off support once again with regards to this currency pair. And interestingly enough, if you look at the British pound against the US dollar, that had a nice acceleration to the upside with the British pound appreciating since March of this year, as you can see here. But then since the mid-July highs at 131.42, we've had the British pound depreciating on that stronger US dollar. And what we've seen over the last couple of weeks is some sideways trading range here unfolding. And right now we're remaining below the orange line, the 55-day simple moving average at 127.65. That caps the currency pair at the moment. And basically from a technical perspective, provided we stay below the mid-August high at 128.19 here, further sideways trading is likely to be seen. Now, for the bears to be back in control with regards to this chart, what we would need to see is a fall through and a daily chart close below 126.17, that is to say the mid-August lows, in which case we could be heading back down again towards the late June lows and also the early June highs between, let's say, 125.44 and 91. So that is a possible downside area if we were to fall through support. But as I've been saying, it looks quite likely that we've just bouncing off support and basically trading in a sideways trading range with regards to this currency pair as well. Now, another currency pair which has been quite interesting over the last few weeks and months has been the Japanese yen, because the Japanese yen has been weakening very strongly over the last few weeks. As you can see, since mid-July, we've had an acceleration to the upside with regards to the US dollar versus the Japanese yen, taking us to 146.56. And if you zoom out onto a weekly chart, you can see here that we last week traded at levels last seen in November of 2022 with regards to the currency pair. And on the weekly chart, as you can see here, it looks as if we are on the fifth wave to the upside, taking us towards the psychological 150 area. Short term, we are encountering some minor resistance. So as you can see here, we've actually retested and basically consolidated and retested the June highs at 145.07 and retested that level again this morning, but are bouncing off us at the moment. And this was due to inflation in Japan hitting a 42-year high last week, when inflation for the month of July came in as before at 3.3%. But as you can see here, the trend's your friend, and from a short-term perspective as well, provided we stay above Friday's lows at 144.93, further upside is in store for dollar yen as well. The oil price has been rising and is on track for its third consecutive days of gains. If you look at Brent crude oil, for example, on hopes that the rate cuts we've seen last week and also this week with regards to the Chinese central bank could help stimulate the world's largest oil importing country's economy, that is China's, and lead to further future demand of oil increasing. And therefore, the oil price has bounced off last week's low at $82.81, which, by the way, was made marginally above the early August low at $82.31. So this is really, really good support, together with the red line here, the 200-day simply moving average at 81.09. And basically, provided we stay above that area, going down to $81.09, further upside is likely in store for the oil price going forward. Now, we have to see whether we can see a similar development as we've seen, for example, with natural gas earlier this morning. Dutch natural gas prices rallied by over 10% on worries that there might be some further strikes in Australia with regards to natural gas production, hitting the supply of natural gas. But at the same time, we are seeing in that market that the storage capacity, basically in a lot of countries, is already at around 90% with regards to the target the European Union, for example, has set itself with regards to the 1st of November as a cutoff date. So storage facilities in Europe are filled to the brim at the highest levels ever at this time of the year, and most countries such as Germany or Italy or Spain are already above that targets they had in place for the 1st of November. I think only France is lagging at the moment slightly, but basically we are not seeing the same momentum to the upside we're seeing with regards to natural gas here in the oil price. That is much more muted, but we are heading back up again. And from a technical perspective, provided we stay above the early August lows at $82.31 on a daily chart closing basis, further upside looks to be more likely in store than any future downside. Now, downside we've been seeing in the price of gold, because the appreciation in the US dollar has really put a dampener on the gold price. And as you can see here, we keep on falling. Yes, it is a very slow and gradual decline, but it has taken us through the 200-day simple moving average at $1,908 per troy ounce. And we've been trading below that level now for the last 4 days. And even this morning, when we tried to break through this 6-week downtrend line at 1,900, actually I should say $1,894 per troy ounce, we once again failed. Now, the question is, what is going to happen next? We've already fallen through the June low at $1,893. Last week, we dipped down to $1,885 nearly, and a fall through there would take us down to, can you see here, the March price gap. We had a price gap with a price gapped higher on this very sharp acceleration to the upside back then. And this price cap comes in between $1,872 and $70. So that is a possible downside target for the price of gold, provided we stay below the red line here, the 200-day simple moving average at $1,908 on a daily chart closing basis. And if we look at the silver price, as you can see here, the price of silver has been trading in a very clearly defined downtrend channel over the last few weeks since mid-July, has hit a low last week at $22.23, which incidentally was made marginally above the June low at $22.12. And basically, provided we stay above that major support area, it looks as if we are going to not only test the upper downtrend channel resistance line around $23, but also last week's high at $23.01. And if we were to rise above there, then the upside targets would be the red line, the 200-day simply moving average at $23.30, and also the orange line here, the 55-day simply moving average at $23.55. So it's possible that we're actually leveling it out here and forming a minor base. But for that to happen, we need to rise above last week's highs on a daily chart closing basis, and those were made $23.01. And basically, this bullish view short term would only be negated if we were to fall through and close on a daily chart closing basis below the June low at $22.12. And in that scenario, perhaps we could slide all the way back down again towards the $21 mark or so. But right now, it looks as if on this commodity, we also found support, and we may be heading, at least short term, back up again over the next few days. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is @AxelR_IG.